It's time for our business update with Stephen Carroll. Hi, Stephen.
Hi, Jeannie.
News of a massive layoff, huge layoffs at Disney's theme parks in the United States.
28,000 jobs are to go, mainly at the parks in Florida and California, although some workers on Disney's cruise liners and shops will be affected as well. The two resorts employ around 110,000 people, many of whom have been on furlough since the beginning of the pandemic. Disney has criticised the state of California for keeping its parks there closed, which it says made the situation worse. Catherine Viette has the story.
It's not the happiest place on earth at the moment, as the coronavirus deals a blow to the Walt Disney Company. Disney announcing plans to lay off 28,000 employees at its U.S. theme parks. The decision comes after California indicated the company's resort in Orange County would likely have to remain closed for the foreseeable future.
In light of the continued uncertainty exacerbated in California by the state's unwillingness to lift restrictions, we have made the very difficult decision to begin the process of reducing our workforce.
2/3 of those being let go are part-time workers. The company's theme park businesses account for approximately half of last year's $7 billion in profit. But earlier this year, the pandemic forced Disney's resorts and parks around the world to close, cutting into earnings. The company reported just over $4.7 billion in losses between April and June, its first quarterly loss in nearly 2 decades, as the theme park's business posted $2 billion in operating losses. Disney's other parks in Florida, Shanghai, Hong Kong, Tokyo, and Paris have all reopened, but are operating at a reduced capacity to allow for social distancing. It was the second reopening for Hong Kong just last week, after the park was forced to shut again in July due to a spike in COVID-19 cases.
The oil company Shell has also announced major job cuts today. It's axing up to 9,000 posts by 2022, around a tenth of its global workforce. Demand for oil has slumped during the pandemic, which has kept prices low, and Shell's profits has slumped as a result. The company hoping to save up to $2.5 billion with these cuts.
Next now to Germany, where the first motor industry executive is facing trial over the scandal known as Dieselgate.
It's been 5 years since it first emerged that car makers had been manipulating emissions tests on diesel cars. Now the former CEO of Audi, Rupert Stadler, is facing charges over the scandal in a court in Munich. If he's convicted, he could face up to 10 years in prison. For more on this, let's go to Berlin and speak to our correspondent there, Nick Spicer. Nick, what exactly is Rupert Stadler accused of in this trial?
Charges are false certification, false advertising, and fraud. We'll get more details as to what that means as the prosecution continues to read the 90-page indictment in a impromptu courthouse, which is actually it's in a jail, if you will, because that's where people can be kept apart. The defendants showed up wearing masks. There was, of course, Rupert Stadler that you were talking about, but also a co-defendant by the name of Wolfgang Hatz and 2 other engineers, and they're accused of installing defeat devices in some 435,000 cars made by Volkswagen, Audi, and Porsche that were sold to consumers. And as you were saying, they face up to 10 years in jail, a trial expected to go into 2022. Now, that sounds like an awful lot of cars, 435,000, but VW itself has admitted to installing defeat devices on 11 million worldwide.
And Mr. Stadler is the first high-level executive to face trial in Germany over the Dieselgate scandal. In the United States, we've already seen convictions on this. Why is the process apparently so behind in Germany?
Yeah, you might be tempted to think the Germans are, keeping their gloves off their national auto industry, which is a source of pride. Germany is the world's biggest automaker. But the fact of the story is it actually broke in the United States. There was a consumer watch group in California which detected these defeat devices, which basically the car's computer can see that it's in a laboratory condition. It's going at the same speed for half an hour. That's not how people drive. And so they lower artificially and temporarily the amount of pollution that gets out of the gas pipe. That's what the thing is. Now, it took a little while for things to take off in the United States. 2 people in jail there. But already VW globally, which owns Porsche and Audi, has had to pay $30 billion in fines, compensation, lawyer fees. And there were cases that began in Germany slowly, and the class action lawsuit for the first time in German history, taking example from the United States. In May, we had a pensioner, one man, sue VW successfully and get paid, I think, around 25,000 euros because he said that they sold him a van that wasn't what it was all cracked up to be. And then you have a decision which concerns some 235,000 people. I'm just going to look down here at 750 million euro payout by a German court. So there is stuff taking place here. And the big news is that CEO Martin Winterkorn, who is in charge of VW throughout the crisis, he's no longer in charge of the company, found out earlier this month that he is going to have to face trial as well for stock market manipulation, for not sharing with stock holders, if you will, what's going on inside the company. And so that would really be a very significant case in a story that has shocked the nation, as I was saying. Very proud of its car culture, of being a world exporter, a world beater in automobile exports, selling fine automobiles, and above all, generally following rules. And this whole court case seems to be giving the lie to that.
Okay, plenty more to follow on that story. Nick Spicer in Berlin, thank you. Here in France, there are fresh fears about how the pandemic is impacting the public finances. The deficit for the social security system, which includes healthcare, pensions and disability benefits, has hit a record high. Experts say it'll be tough to balance the future budget with all the extra spending.
Thanks to the coronavirus, France's social security system is facing a record deficit, almost 45 billion euros this year. And next year is looking pretty grim too, with a projected deficit of more than 25 billion euros. The main reason, a big increase in healthcare spending, including on masks, gloves, testing, and wage hikes for medical staff. That's been combined with a drop in revenue as more people were put on the government's temporary unemployment program. With no events to cater, the 33 employees at this firm are all furloughed. The French government pays their salaries, while their boss is no longer required to pay the standard social charges. That means less money overall coming into the social security system, and the impact being felt on pensions, which the government says is facing an almost 8 billion euro shortfall this year. The effects are projected to impact the system for the near future.
On accumule des déficits historiques qu'il va falloir rembourser. Ça va se traduire par une dette qui va être de l'ordre de 136 milliards en 2024 qu'il va falloir rembourser pendant 10 ans. C'est l'équivalent de deux fois le budget d'éducation nationale.
It's not the first time Social Security has been in trouble. Back in 2010, during the height of the financial crisis, the deficit hit 28 billion euros.
Yeah.
Let's take a quick check on what's happening on the European markets for you this lunchtime. London, Paris and Frankfurt all trading in the red. Not much clarity for investors from last night's US presidential debate, though there are new inflation figures here in France showing price rises slowing to 0.1% in September, a worrying indication of the state of the economy.
Stephen, the city of Seattle in the United States has agreed to minimum pay for drivers of the ride-hailing service Uber and others.
And others. The new law will mean that these companies will have to pay drivers a sum equivalent to the city's minimum wage of $16 an hour. It's a decision modelled on a similar move by New York City in 2018. Seattle's mayor says the pandemic has exposed the fault lines in their systems of worker protection. A spokesperson for Lyft, one of the major ride-hailing firms, saying the plan was flawed and would destroy thousands of jobs. Jeannie.
Stephen, thanks so much. Stephen Carroll there with our business update. We're going to take